one of the things I was, mentioning is that we're going to have a credit crunch. And so things like the unicorn companies are all going to go away. They're all going to blow up. If you can't generate cash, and you're going to be gone. There is not going to be cash because the Fed is going to take away excess liquidity. And with that shrinking in liquidity, there's going to be all sorts of credit crunches. And so the question is, where do you go with that? And so, of course, the unicorn companies are all down a huge amount. Companies like Shopify are down 50%, and they've touched 60, bounced off a little bit, and and then so those are easy to see that with the discount factor coming to be, with a higher interest rate, you're going to have a discount factor that makes near-term cash flows much more valuable. And so as the Fed takes away the punch bowl, there's just a tremendous amount of liquidity in the system. And part of that is because we were fighting the last war. We were fighting the great financial crisis. And so when you had banks that were in a credit crunch and busting up, you had to supply a tremendous amount of liquidity, and you didn't worry about it because people were hoarding cash. In the great financial crisis, we hoarded cash. Banks hoarded cash. Individuals hoarded cash. And now we're in the opposite point of the view of this. It's a tremendous psychology change. Banks are making loans like crazy all over the place for mortgages. People are spending money. We have a complete change of psychology. So the velocity of money is turning up again.